So for chapter 3, we're going to look at recording journal entries and posting things to T accounts. Except for this example, we're going to be posting them to what's called a general ledger. T accounts were kind of the precursor to the general ledger. They're used as a learning tool, but if you were to physically do your accounting for your business or for any situation, you're going to be using a general ledger instead of T accounts. So we're going to show you how to use that general ledger. The directions for this problem says record journal entries for each of the following transactions, then post all of your journal entries to the appropriate T accounts. After completing the postings, determine the ending balances of each account, which we're going to do as we go along. An Excel template can be found in your Student Resource Center. I have created a specific Excel worksheet and posted it to your lesson area. So let's look at that Excel worksheet really quick. Here it is. So first we have a general journal. We have columns for our date, descriptions, post reference, debit, and credit columns. The next tab over is our ledger. And this is what I was talking about. Kind of similar to a T account. You still have your debit, your credit. We're going to track the balance as we go and fill in our dates. Okay. And again, I'm going to show you how to use that. So popping back over to our journal is where we're going to start. Let's look at our first entry. On November 1st, Bernard Oliver invests $325,000 to open his new gardening tool boutique. Okay, so just like we did in chapter 1, we're going to break this entry down into the 2 or 3 accounts that we need in order to complete this journal entry. Bernard Oliver invests $325. So that's going to affect cash because we're receiving cash. And it's going to affect capital because he's investing in his business. Okay. So cash and capital, $325,000. Now, first thing we're going to do is fill in the date. And the date was November 1st. So I'm going to come over here and fill in the year first, 2022. And if this is an Excel trick, if you press Alt, hold down the Alt key and press Enter, it will give you a second line. Okay, we said it was November 1st. Now, we always list the debit first. Okay, now in this case, we are receiving cash and we're also giving our owner some capital. Cash is an asset, so therefore it increases on the debit side. Okay, so we're going to debit cash. Again, debit does not mean debit is in your debit card, and credit does not mean credit is in your credit card. It simply means the left side of the account and the right side of the account. Okay, so we debited cash for $325,000 because cash is an asset and it increases on the debit side. Something I like to do because it really helps is kind of make a little note over here, especially for first year accounting students, because cash is going to be a majority of your transactions that you're going to see. Okay. So just a little note on the side so that we have that. Now, your debits and your credits have to equal. Your whole accounting has to be in balance, okay? So we debited cash for $325,000. We're going to credit capital, but I can't remember the owner's name. It was Bernard Oliver. So Bernard Oliver, capital for $325,000. Now you'll notice that when I typed that in, that automatically indents a little bit. We do want to indent our capital line. And for some of these lines, I have automatic indents. We might have to fix those as we go. I might have put some of them in the wrong spot depending on the problem. This post reference column, we're going to leave this blank for now. We're going to come back to that when we post these to the ledger. Okay. Our second transaction on November 5th, the company pays $57,000 for inventory. Okay, so we paid cash for inventory. So if we go back to our journal entry, we know that we paid cash, so cash is decreasing. So we're going to end up crediting cash. Okay. We are paying cash for inventory. So we're going to debit the inventory account for the $57,000. And again, we said we're going to credit cash for the $57,000 because we're removing cash from our account. We're decreasing cash. Okay, we're paying cash. Oh, let's see. Our next transaction on number 3 on November 8th, its first day of operations. The company sells $3,475 of merchandise on account. On account, not cash. The cost of the merchandise sold is $1,900. Now remember from chapter 1, we said that when we sell merchandise, we have a two-part journal entry. We have a two-part equation here, okay? First, we have to calculate for the merchandise that we sold in our sales revenue. So that one's going to affect accounts receivable because it's on account. Somebody now owes us that money. And it's going to affect our sales revenue because we've sold something. The cost of merchandise sold part of this is going to affect cost of merchandise sold because, we have to keep track of that. And it's going to affect our inventory because we have to pull that amount out of our inventory. Okay. So let's look at the first transaction. Well, first we need the date. Okay. The first part of the transaction is that we sold merchandise on account, not for cash, on account. Okay. Whenever we sell something on account, we're going to use our accounts receivable account. This is what we use to keep track of the amount of money people owe us. Okay. Accounts receivable. It's receivable. We can still get it. Okay. So we're going to debit accounts receivable. It is an asset. It increases on the debit side. And we're going to credit sales revenue. Okay. Sales revenue is an owner's equity account, and that one increases on the credit side. Okay. So we credit sales revenue to show that we had that revenue. Now, the second entry to go along with that, we said was cost of goods sold. Oh, that one should not be indented. So I'm going to come up here and just unindent that one. Okay. Cost of goods sold for $1,900. And we need to remove that $1,900 from our inventory. So if we look on the 5th, we had purchased $57,000 in inventory. So we debited it. Now we're going to credit it to remove, that amount from our inventory. Okay, and I'm going to indent that line because that is our credit. So again, debit to accounts receivable to show that somebody owes us money, credit to sales revenue to show that we sold that amount, debit cost of goods sold to show that we had that expense of that cost of goods sold, credit to inventory to remove it from our inventory. Our next one, number 4, on November 13th, the company pays, so we're looking at cash, $84 for utilities. So we paid an expense, okay? We paid an expense. So our date is the 13th. We paid our utilities expense. Expenses are debited to show that they're increasing. They increase on the debit side. Again, I'm going to unindent that one. My indents are a little messed up here. And we paid cash. So I'm going to credit cash because remember, cash decreases with a credit. Okay. Cash decreases with a credit. So I paid my utility expense. So I'm debiting utilities expense to show that I paid it. I'm crediting cash to show that I no longer have that amount of cash. November 15th, the company pays, so we're using cash, for supplies. Okay, pays for supplies. So 15th, supplies is an asset, so it increases on the debit side. And we paid cash, so it decreases on the credit side. And again, I apologize, my indents are off here. Oh, look at the Excel practice you're getting anyway. Okay, so again, we paid cash for $925. That's our credit. For supplies, supplies is an asset, so we're going to debit that for $925. November 17th, the company receives $3,000 in partial payment for the goods sold on November 8th. Okay, so if we come back up here to number 3, we see on November 8th, we sold $34.75 on account. That means that they didn't pay us for that stuff. We kind of gave them an invoice and said, hey, pay us later. Okay. On the 17th, we've received $3,000 in partial payment for those goods. Okay. Received cash. Okay. This is also going to affect accounts receivable because they no longer owe us that $3,000. So we're going to start with the date, which was the 17th. We received cash. Cash increases on the debit side for $3,000. We said the other account is accounts receivable. We're going to credit that because they no longer owe us that amount of money. Now, let me say that again. Here on the 8th, we debited accounts receivable for $34.75. Here they've paid us $3,000, so they no longer owe us $3,000. So we're removing that from our accounts receivable account, and we do that by crediting it. Okay. Our next one on the 20th, the company purchases furniture for $2,000 on account. On account. However, this time we're purchasing something on account. We're not selling on account like we did on the third one. We're purchasing on account. So instead of using accounts receivable, we're going to use accounts payable because we now owe people money. Okay? People aren't owing us money, we're owing them money. So accounts payable, and we're receiving some furniture. So first, our date of the 20th. We're getting some furniture. Sorry about that. Apparently I can't spell this morning. $2,000. And again, we now owe them money, so we're going accounts payable, $2,000 credit. Furniture is an asset, so it increases on the debit side. Accounts payable is a liability, so it increases on the credit side. So now we're showing that we owe the furniture company $2,000. The next one, on November 23rd, the company sells $4,800 of merchandise for cash. The cost of the merchandise sold is $3,100. So we're selling merchandise for cash, and we do have a cost of goods sold. So again, two-sided entry. The date is the 23rd. We're receiving cash of $4,800. And it was from sales, so we have sales revenue of $4,800. I'm going to indent that credit there. Again, two-sided entry. We have to keep track of that cost of goods sold, and it said cost of goods sold was $3,100, and our inventory was $3,100. And again, going to indent that one. Notice over here on the right, my commas were working, and now all of a sudden they stopped working. So I'm just going to stick commas in here and decrease my decimal. Okay. So again, we sold merchandise for $4,800. We received cash. Cost of goods sold was $3,100, so we're removing that from our inventory to show we no longer have that amount of product. On November 28th, the company receives interest earned on its bank account of $45. Okay. We received interest earned on our bank account for $45. So we received money, so we're going to debit cash. Oops, sorry about that. First, our date is the 28th. We're going to debit cash for the $45. We received it for interest we've earned, so we're going to use our interest revenue account for $45. Okay, indent that one. And our last one, November 29th, Bernard withdraws $24,500 from the business. Okay, so this is going to affect our cash because he's taking money out. It's also going to affect our drawing. So your drawing account, much like we talked about in chapter 1, is the account that keeps track of how much money the owner removes from the business. And in this case, it was $24,500. Indent that second line there. Okay. So now we have all of these journal entries. So let's say this is the end of our page. We're currently on page 1. Okay, let's say this is the end of our page. So what we would do is we would put down here a date and the totals, and we would add this whole column of debits to make sure that our debits and our credits equal. So I'm going to use the Excel sum feature that we learned about in chapter 1, equals sum of, and I'm going to click and drag over the entire debit column. Then I'm going to drag that equation using that fill handle on the bottom right to the right. So this is now adding column F. If we look at our formula here, it's adding all of these numbers, and they are equal, which is what we want them to be. Okay. I'm going to put a double bottom border on this, bottom double border, to show that we've looked at it. We know that they're equal. Okay. The next step in your problem was to post all of the journal entries. So that's what we're going to do next. We're going to come up here to journal entry number 1 to November 1st. The very first line was cash. What we're going to do is copy, okay? Not physically copy and paste with our mouse, but we're going to copy the information from one page to the other. So on November 1st, we had a debit to cash for $325. So I'm going to go to my ledger. I'm going to go here and type in my year, Alt Enter, November 1st. The post reference in your ledger is the page number of your journal. Okay, so I'm going to put 1 in there. It was a $325,000 debit, which gives me a $325,000 balance. Okay, so again, I just copied the date, the page number from your journal. It was a $325,000 debit in the journal, so I made it a debit in the ledger, and then the balance of $325. I'm going to take this account number 11 and take it back to my journal, and that's what's going to go in this post reference column. So I'm going to go to the next line. Capital was a $325,000 credit, so I'm going to go to my ledger, find my capital account, fill in my dates. Don't forget the month and the year. November 1st, page 1. It was a credit for $325,000, so my balance is a credit for $325,000. Take my account number of 31 back to my journal. Okay, and I'm going to continue to do this all the way down. I'm going to do this next one on the video, and then I'm going to show you what it looks like when it's completely finished. So November 5th, inventory was a debit of $57,000. So I look for my inventory account. There it is. Year, month, whoops. Oh my goodness, November 5th. It was page 1, and it was a debit of $57,000, which gives me a balance of $57,000. My account number is the 13th. Is 13, back to my journal. Okay. Now on the 5th, I had a credit to cash for $57,000. So if I come up to my cash account, 5th, 1st, $57,000. Now, when you have a debit, when you're trying to find the balance and you have a debit balance and then you have a credit to the account, you're going to subtract the two numbers. Okay. You can do this on paper. You can use a calculator. I'm going to use Excel. So I'm going to type in equals this number minus this number and press enter. And it's going to automatically tell me that my new balance is $268,000. Okay. So our general ledger is going to track our balances as we go through this problem. Go back here, put my 11 in there. If you have two debits, so here I have a debit balance, and let's say I get another debit, I'm going to add those two numbers together. Okay. So you're going to continue through each one of these lines and copy them into the ledger, keeping track of your balances as you go on. And let me show you what it's going to look like when you're finished. Okay. When you're all done, you're going to have a general journal that has all of the post references in the post reference column. And you're going to have a ledger, let me scroll up here, that has all of the entries typed out into it. And you can see each line is each entry in the journal. Each line in the journal is a different entry in my ledger. So let's talk about this balance column now that you can see when that's completed. Here we have the 325, and then we had a credit, so we subtracted to get that balance. Another credit subtracted to get this one. Another credit subtracted to get the 266,991. The next one was a debit. So I added these two numbers to get the 269,991. Okay. Again, another debit. So those two were added, debit, added, credit, subtracted. Okay. So like terms, if it's two debits or two credits, you're going to add them together. If it's a debit and a credit or a credit and a debit, you're going to subtract them. Okay. All of these final problems are in the written out explanation. All of the final answers to this problem are in the written out explanation. So if you need to see this without it scrolling across your screen, you can look at it there as well. If you have any questions while you're working on the step-by-step problem, please let me know and I'll give you a hand. The problem that you're doing at the end of this module, the weekly assignment, is extremely similar to this one. Okay. I hope you guys have a fantastic week.